This is a deep product dive into our debt service coverage ratio program. We also refer to it internally as our investor cash flow. Some of the other national webinars we've done, the feedback we've received is, hey, we want more information on how to be a subject matter expert also. So Chris Barker, I want to introduce Chris Barker. Chris Barker's account executive for us on the East Coast. Chris, say hello, please.
Hello.
And then we have Al Wooten, who's up in Michigan. Al, please say hello.
Afternoon.
Great. All right, guys, so we're going to get started here, but before we go into highlights of the programs, the agenda is going to be, we're going to do a quick poll here in about a minute, and we're going to go over highlights of our investor cash flow program, which is also the debt service coverage ratio. We're going to go over highlights of a program that fits under that debt service coverage ratio program, which is our foreign national. We're going to go into what the 1003 should look like. We're going to go into what the credit should look like. And then we're going to get into the Q&A. We're also going to show you some cool tools we have so you can get rate quotes. And then we're going to go over, last but not least, how to market, how to find these borrowers. So let's get started with our poll. Who has originated a debt service coverage ratio in the last 12 months? Hold on, launch the poll here. Wow. Okay, we're getting more and more people. Everyone, this is, okay, so we've got 65% of you have not originated a debt service coverage ratio program in the last 12 months, which is a huge opportunity. This is about 30% of our business right now and growing. I'm going to have Chris go over the highlights of our, what we call investor cash flow, but our debt service coverage. Go ahead, Chris.
Okay, so thank you for being here today and listening to what we hear is called the sexiest loan program out there, and I think that's because it's new. So let's talk a little bit about how we used to think about investment properties versus how we think about them now. Previously, most of us are of the mindset that you have to have debt to income ratio, DTI. So in loan officer school, they taught us all that each loan must exhibit ATR, ability to repay. So instead of, think of it this way, instead of the debt to income ratio, you're looking at a debt service coverage ratio, meaning your standard 45-50% DTI is now a DSCR of 1-to-1. Instead of the borrower's ability to repay with income, we're looking at rental income. So that's really the main difference between a full doc investment loan and this beautiful new investor cash flow loan that does not require the debt to income ratio at all. So that's what we're looking at. This really opens up opportunities for people who have, let's say, 60, 70, 80% DTI. Well, in this case, we're not looking at DTI. We're looking at, can the property itself pay for itself? And as long as we have that, we have a closed loan, and it's a simple loan to close. There's not a lot of paperwork behind it, again, because there's no DTI. Anything that factors into the DTI, you don't really need to worry about.
So Chris, can you just cover some of the highlights here, though, for the investor cash flow?
Investor cash flow, you are looking at a minimum loan amount of $75,000. So that opens up a lot of possibilities. The maximum loan amount is $1.5 million on a case-by-case basis. If you're in a location where, a $2 million investment property is very common, we can look at that too. But as a standard, we look at $1.5 million. Again, the basic goalpost to hit for a DSCR loan, again, debt service coverage ratio, meaning will the rent cover the debt being the mortgage payment. So we're, as a minimum standard, looking at a 1-to-1 ratio. Okay, well, what does that really mean? So in that ratio, you have two ones. Let's think of the second one as the mortgage payment. Let's just call it mortgage payment. That includes PITIA. The A is homeowners association. So let's just say all in, that one of the 1-to-1 is $1,000 a month mortgage payment. Okay. So here's how this loan works. You order an appraisal. On that appraisal, you get a 1007 market rent analysis. That appraiser goes out there and he looks at the property and says, in my professional opinion, this should rent for, guess what, $1,000. So there's your other one for the 1-to-1 ratio. Bam, off to closing. No VOE, no pay stubs, no tax returns, no 4506, no W-2, no updated pay stubs. So as you can see, this is an awesome loan that can exactly bail you out in a lot of positions and be your go-to in a lot of positions. Again, no income. We're not even looking for that. We're not going to be digging into. This is great for someone who's just gone W-2 to 1099 or 1099 to W-2 or W-2 to retired. We're not even looking at that sort of thing. Great also for a person 60, 70, 80% DTI. We're not going to ask for it. We don't see it. We don't look at it. Again, we're looking at the property's ability to pay for itself. This is also great for a customer who's got a multitude of finance properties. I think Fannie and Freddie cap you at 10. We cap you at 10,000. It doesn't matter. We will do 5 new loans or a maximum exposure of $3 million in that product category. We also, this is something new that has affected me here in the Southeast greatly. We allow short-term rentals and VRBOs on condos. So, the Myrtle Beach community, the whole coastline of Florida, South Carolina, Georgia, Virginia, even that lit up for us quite nicely. Now, what we're not looking for on the condo situation is we don't want to see a front desk. If it looks like a hotel, we're probably going to shy away from that. So send that to your account executive. Let them send it up to our condo questionnaire review team. They'll give it a good look over and give you a yes or no before you even take the loan application. So that's pretty great service for you there. We also can close in an LLC. A lot of people ask for that. You don't have to close in an LLC. I also get that question asked from time to time. So you can do whatever you prefer to do. Now, one thing that in a minute we're going to talk about how bulletproof this loan is, but one thing I want to tell you is the gotcha on this loan, okay? Your AEs will always be on the lookout for this one thing that can be a potential deal killer. If we feel, or if an underwriter smells that this borrower could be using a no DTI loan, so say, for example, circumventing DTI to upgrade their current primary or to buy a primary, we will not proceed forward with that. So, for example, let's first say what we're looking for. You have a borrower that has a $500,000 primary occupancy, and they're looking to buy 2, 3, 4, 5 investment properties in the $200,000 range. Clearly, they won't be upgrading from the $500,000 property down to the $200,000 property. That's what we're ideally looking for. So we want loans to make sense. Now, here's what we're not looking for. Someone who lives in their mom and dad's basement and they're buying their very first property and it's an investment property. That's going to be that doesn't look right to me. Another one is, let's say the borrower lives in a $150,000 primary and they're looking to buy a $1.5 million investment property. That's clearly going to be an upgrade and something that we are going to shy away from. So as long as it makes sense, we'll do the deal. Just keep that in mind. And that's one of the greatest things about Angel Oak, I think, is it allows you to go out on the street and differentiate yourself from other, I call them vanilla loan officers, because they're stuck in that box. They're stuck in the DULT, FHA, VA, USDA, something that ends with an A for government agency world. And these loans allow you as a loan officer to get creative and go, hey, I can do an investor cash flow on that person who's got a 65 LTV. So it really opens up the creativity back into the industry and allows you to differentiate your market. Let's see what else is on this list. A lot of people ask me, hey, can you do cash out on this? Absolutely. Rate and term, purchase, and cash out. Now, here is a really cool part of this product that a lot of people miss. We also offer a interest only on it. So why are people buying these investment properties in the first place? They want cash flow. They want to maximize how much money they're getting from that property. Well, here's a great answer to them. Do a 40-year AM. It's a 40-year AM. with a 10-year interest-only period. At the end of that 10 years, it becomes a 30-year amortizing loan. That borrower, your customer, gets to max out their cash flow. They're going to love you for it. If you have any questions about that, please hit the poll. We've got one of our I call him super account executives on hold giving answers on the poll too. Non-warrantable condos. We talked about that.
A ton of questions coming in. I want to give Al a chance to go over the foreign national highlights, and then I promise you we're going to get to your questions. We're going to go over what the 1003 needs to look like. Al, go over the highlights of our foreign national, and then go right into what that 1003 needs to look like. Al, please.
That sounds good. Thanks, John. Okay, foreign national, take the DSCR product that Chris just described, and we can also do this for a foreign national borrower. Foreign national borrower is somebody who obviously they just don't live in the United States. They don't have we don't look at foreign credit, and they don't need to have U.S. credit. There's similarities. Once again, the minimum and max loan sizes are going to be the same. It's different on the DSCR ratio. We need to have a 1-to-1 ratio if it is a foreign national borrower. The assets are different because they're going to be seasoned for 60 days, but they must be in a U.S. sourced or seasoned, actually. They must be in a U.S. bank account for a minimum of 30 days. So it has to be an FDIC insured bank. And instead of 6 months reserves, we want 12 months reserves on this. We're going to need an ACH auto payment setup. This needs to be set up during underwriting. We can't move this to a closing condition, so that'll have to be set up ahead of time for the payment. Now, there's a few things that you need to look at in terms of qualifying the borrower, that they're not from a country that's on a sanctioned countries list. And we can provide you with a website. You can look it up. You can see the U.S. sanctioned countries. The foreign national borrower cannot they can't reside in the U.S. That's what defines them as a foreign national. You're going to see that we have eligible visa types. They need a visa. They need to be able to travel. They need to be able to close the loan here, but they also need to be able to, they need to be able to travel to the United States. So that's where the visa and the passport are going to come into play. There is also a visa waiver. There's a list of countries, and we can provide you with that. It's a website. You can see the countries that are eligible for a visa waiver, and there's several of them. One thing that is similar on both of these programs, there's no gift funds on this program at all. On the, for U.S. borrowers, you can get a 3% seller concession, but there's no gift funds on either one. And then if the loan amount ends up being $1.5 million, then we want 2 appraisals. That is the overview.
Yeah, Alan, there's a ton of, Al,
Yeah.
I don't know why I'm referring to you, Al, there's a ton of questions coming in from foreign nationals. So let's talk about what the 1003 needs to look like for both programs, Al, because it's really easy for one part of it, and then it's, there is information that we do want. So go over that.
Okay. So basically, obviously, a good 1003 is super important. You get a good pre-qual, and it's also going to help you troubleshoot and find problems right up front. So when you fill this out, I got some spots you can look for where you can, give people a quick answer, because if the answer is no, they want the fastest no possible. So starting under the borrower's personal information, you're going to list how long they've been at their current residence, their current address, and that they own it. Now, most of this is going to apply to the U.S. borrower for DSCR. At that current address, the reason that we care about that is because they have to, if it's a U.S. citizen, they have to own a primary for 12 months in order to qualify. Under the borrower's employment section, going back to Chris's points on the DSCR ratio, employment and income are left blank. This is going to be the same for U.S. or for foreign national borrowers because we use the DSCR to qualify, and it still meets ability to repay. This is an investment property loan, so the focus on this is the income of the investment, not the investor. I guess if you think about it a little bit more like a commercial loan, it fits those parameters because we care about, so the rent covers the mortgage payment, and this is verified by an appraiser using 1 year's leases. You generally won't see people buying rentals that they can't rent for as much as the mortgage payment is. So it's a problem that takes care of itself for the most part. The benefit is streamlined documentation. If you're not using debt to calculate a ratio, you're not chasing down leases on other properties that they own to offset debt. If you think about it, if you remove the income, you remove everything that goes against that income. So it's for investment buyers. They like it. It's a streamlined documentation and it makes sense. The next section you're going to look at is assets. You'll need to cover the down payment and then 6 months reserves for U.S. borrowers, 12 months reserves for foreign nationals. And this is on the subject property only. This is another benefit because you don't need reserves on all the investment properties that they owned, just the subject. So once again, it's streamlined just for investment buyers. Business accounts can be used for assets as long as the borrowers on the loan can access 100% of the funds. So if you got 2 borrowers that own 50%, you're good. You got 1 borrower that owns 100%, you're good. The next section that you're going to look at is the REO section. This is important. It's important because it identifies all the properties owned, if they're primary, second homes, or investments, and the mortgages that are attached to them. We're not concerned with the payments, just the payment histories. So we will need 12 months. We're going to require 12 months clean payment histories on all properties that have a mortgage. This obviously does not apply to a foreign national because we don't have a credit report for a foreign national. The next section is the loan and property information on the subject property. This is a good place to get an idea if what they're buying makes sense. Chris brought up, does it look like they're upgrading, or are they buying an investment property? Underneath this section, you're going to look at it. You're going to see that it'll give you at least a general idea if it makes sense. Below this spot is, there's a place for estimated rent. This is going to help you get an idea if they're going to ratio using the DSCR.
Hey Al,
Yes.
let's move this. We got Chris, briefly talk about what we need on credit, and then I promise everyone, this is being recorded. We will get a recording out to you. We will get all your questions answered. If we don't answer them on this call, we will definitely have your account executive reach out to you. Chris, cover briefly the credit. What are we looking for on the credit? Trade lines, how long, what activity, and then we'll get into the Q&A.
All right. The first misconception I hear a lot when loan originators call in is that, hey, what's the credit score requirement on this? 720? And I'm like, no, it is a 600, okay? So the entry level score to get into this is a 600. You're going to have a little bit limited LTV at 600. Your max LTV is going to be 70. Now, with a 640, you're going to go all the way up to 80%. And you guys know that that's pretty common on investment properties anyway, but we're talking about a debt service coverage ratio, investor cash flow, no income, no employment, no DTI. With a 640, you can get 80% LTV. So number one, that opens up a ton of opportunities for you guys. Other credit things we're looking for. We want to make sure that this borrower is qualified and can handle this loan, since we're not looking at the income, we're not looking at the employment depth and all that, but we are looking at credit depth, okay? What we want to see is certainly someone, this is the ideal candidate. Again, 50% of our loans have exceptions on them. So if it makes sense to you and you can paint that picture to the underwriter, we'll get that deal done. But basically, we're looking for 3 trade lines reporting for 12 months or 2 reporting for 24 months with activity in the last 12 months. So the best thing to do on that is, with that information, you can look at your credit report and go, hey, this guy looks great. He's got, 4 or 5 trade lines that meet that. If you're iffy about it, upload it into our quick quote tool. It'll deliver to the AE and let that AE review it for you. And another cool thing about reviewing the credit is those AEs can give you a credit underwrite with a TBD property. So if your guy's going, hey, do I qualify for this? TBD and the address line, send it off to the account executive. He'll get back to you probably within 24 hours. Some of these loans are so easy for us to pre-underwrite. I can get them done in 5 to 10 minutes if the phone's not ringing off the hook. So if you really need help from your AE, call them up and say, hey, how fast can you do this? On the interest only, you need a 680 credit score. Same thing, max LTV is 80%. You need to, one thing that is we're a little hardcore on, is pretty standard, 0 times 30 on the mortgage history. You know, we really don't want to be doing hundreds of thousands of dollars on a loan with no DTI to someone who can't pay their current mortgage now. So that's something you definitely want to look at. The good news about that is we're only looking back 12 months on that. We used to look back 24, so we've really eased up on that. Not too hard to get that loan through. I think that's about it. John, anything else you want me to hit on the credit?
We got to get to questions here. A lot of questions coming in. Al, one question here we have from Kim. Is this okay for a first-time investor?
It is okay for a first-time investor, as long as they own a primary for 12 months.
Great. And then David's asking, is this loan require that we pull personal credit, Chris? Can you take that question, please?
Yes, each borrower must personally qualify. And sometimes I get asked that question, hey, is this going to report to the credit report afterwards? Yes, it is. So let's say you have 2 borrowers, unrelated, don't live together, and they want to go in and buy an investment property in an LLC or individually. We're going to pull both their credit. We're going to use the lower middle of the 2 scores to score it off of, and off you go. But yes, we're going to look at what their credit looks like.
So your audio's cracking up there a little bit, but Al, I got a question here from Leslie. Are you required to document all the properties owned by the borrower? You kind of addressed that when you went through the 1003, but can you clarify that, please?
No, that's a good question, because sometimes people have the misconception that if a loan is closed in title vests in the name of an LLC, it's not going to show up on a credit report. It's extremely rare that it doesn't. It's generally commercial people that are buying commercial properties that don't have that, because you have 2 documents that you have to take into account that are filed with the county. There's the mortgage note, and then there's the title. Well, the mortgage has the name of the individuals on it. The title has the name of the property. So because the name, generally, even if it doesn't show up on a credit report, a lot of times it'll be found anyways. So they'll have to verify those payments.
Yeah, Chris got another question here from Justin about refinances and cash outs. Does the property have to be occupied?
It cannot be vacant. How about that for an answer?
That's a better way of saying it. Thanks, Chris. Yeah, so Justin, the property cannot be vacant at the time for a refinance or cash out when the appraiser goes out there. So hopefully that answers your question. Al, talk about, we have a question in here from John. He's asking about, do we do more than single family, like 2 to 4 units?
We'll do up to 4 units attached. I say attached because I get questions a lot that they'll have 2 properties. Once you start getting, these are rental properties. Once you start getting into vacation areas, they might be on a lake where there's, 2 or 3 that are detached. Detached doesn't work, attached does, up to 4.
Yeah. And then this question, and really because we're in such a hot housing market, Chris, talk about delayed finance. And I know you talked about purchase, refinance, cash out. Talk about delayed financing, please.
Delayed financing, obviously all you guys on the call have run into that in the last year because it's been such a hot market and you have to do that deal right now. So this is, again, a wonderful program. We also have another one called Asset Qualifier that we'll show you a marketing flyer for that in a minute, but I don't want to get too far off base. But on delayed financing, the borrowers paid cash for the property because they wanted to get that deal done quickly. Within 6 months of them paying cash for that property, we can actually do delayed financing. So, and I've seen this a couple of times in the last couple of months. The loan originator will send us a pre-qual. We'll go ahead and pre-qual it up, go ahead and put it into underwriting. And while we're waiting on that appraisal and title work to come in, bam, they close that deal. And 2 or 3 weeks later, we come back and put their money back in the pocket of that investor. They can go buy more investment properties. And, you cut the underwriting time in half, which, it's certainly not a lengthy underwriting time anyway, because again, you're only verifying the real basics. Purchase contract. People ask me all the time, what do you need me to submit? Purchase contract, driver's license, homeowner's insurance, tax, title, appraisal. That's going to be your big time eater, as you all know, and title work. But other than that, and assets, of course. If it's, now, while I'm touching on assets, if it is a refi cash out, the cash out will cover your reserve requirement. So, hey, there's no assets required. Pretty awesome, huh?
Yeah, that's a great point, Chris, on cash outs. And we touched on it a little bit. I think Chris touched on it a little bit about having your account executive. 30% of the loans we close here at Angel Oak do not meet our guidelines. So, what Chris and Al read over are some of the highlights. But when you give us a 1003 and credit report, if it doesn't meet our guidelines, we're going to go to our credit desk and get that done. And that's all done at the pre-qual stage. So Al, Chris, any of the other account executives we have across the country, they all have access to that help desk. So when they produce a pre-qual, that's a deal we're going to close on. So, hey, Al, talk about the prepayment penalty on this on our investment property DSCR program.
Yeah, if you're in a state that allows prepayment penalties, first and foremost, there's only a prepayment penalty allowed anywhere on investment properties. It's going to default to a 3-year. If you want better pricing, you can go to a 4-year. If their plans are different and they want to buy out the prepayment penalty, that can be brought down to from 3 years to 2, 2 years to 1, and then down to 0 using either a price buyout, or you can, you can adjust the rate accordingly.
Yeah. So again, foreign national, I think we talked about it earlier. Al, I know you know a lot about foreign national, not that Chris does it, but can a foreign national purchase this as their primary? And you covered this, but
no, because they can live in the U.S.
Right.
It's it's investment property only, and generally that works because that's what they're looking for. I mean, I'm pretty close to Canada here, so we do see them. They're looking for investment properties. Generally, they want to buy something in Florida, so that's all they want.
Yeah, thank you, Al. And then Chris, I know you've always talked about this. You briefly touched on the ratios. Covered the 1-to-1. Give us what the ratios look at if it doesn't cash flow, and still people are purchasing investment properties even if they don't cash flow because they're looking for the appreciation. So give us a scenario or something you see, talk about different ratios and if they don't qualify with the cash flow.
Okay. This is something I love to talk about with realtors. As you go out and market yourselves to your realtor database, I would certainly build confidence within them on this program. And earlier I said it's some people call it the sexiest program. I think it's our most bulletproof, or the most bulletproof program in the whole mortgage industry. And here's why. As we stated before, no tax returns, no 4506, no VOE, no pay stubs, all that stuff. Forget about that. What we're looking for, and what most lenders that do this are looking for, a 1-to-1 ratio. Okay. Well, that is our guideline on a 600 to 700 credit score. Okay. You do need a 1-to-1 on a 600 to 700. Now let's just talk about, oh my, what if? So let's say that appraiser goes out there, and remember, we were talking about a mortgage payment of $1,000. And let's say that appraiser goes out there and he comes back and he says, in my opinion, this should rent for $850 a month. And you're like, oh man, my guy's paying $1,000 a month. Now, again, relay this to your realtors when you're telling them this, because this will really register with them and they will become your sales force and they will start selling this product for you. So the appraiser says, I think it's going to rent for $850. Well, that's a 0.85 to 1 ratio. Is that a dead deal? No, not with Angel Oak. If you have a 700 credit score, we are okay with a 0.85 to 1. Bam, off to closing you go. You have to let your realtors know about that. You have to let your investors know about that. If you do nothing with it, no one will do anything with it either. It's kind of like a missionary job. You got to spread the good word about these products. Now, I'm not done yet. I said it was bulletproof. Let's say the appraiser does the worst job in the history of appraising, okay? And he goes out there and he says, in my professional opinion, this should rent for $10 a month. Wait, what? What? $10 a month? My mortgage payment is $1,000 a month. Is that a dead deal? No. If you have a 700 credit score and you put 25% down, we have a no DSCR, no debt service coverage ratio requirement. Bam, off to closing you go. That is a bulletproof loan. Tell me how you kill that deal. How do you kill that deal? We talk about there's only one way, and that's, when they're trying to upgrade a primary. So use your judgment when you are interviewing customers, and use your ability to market this to realtors to turn them into your sales force. This is the greatest thing since sliced bread.
Yeah, no, and Chris, we are going to talk about marketing. I promise Al's going to talk about our quick quote tool. Elizabeth, I'm going to tease you a little bit with the marketing part, where I have seen a lot of people, and Al, you might want to jump in here, where I have seen a lot of people find these customers. You have a lot of foreigners who want, there's a lot of geopolitical stuff going on right now. So people are wanting to invest in U.S. real estate. I see specifically a lot around universities. Foreigners wanting to send their children to the universities over here, and they'll purchase that property. Al, maybe if you have a couple of other examples of what you see, or Chris, if you guys don't mind sharing, just to help Elizabeth out from a marketing perspective. And we'll get to some marketing tools for you, Elizabeth. Go ahead, Al.
Yeah, on the foreign national, I've seen that exact scenario, because they want to buy a property for their kids and then rent it out to other people besides them when they're at university. So that I've seen. I've seen it go from there all the way up to, there's a guy that I have that's a customer. He is French. He deals with French investors, and he shared with me that investors that are buying properties in different international markets, Miami, Florida is one of the hottest markets for them to buy in, because when you put Miami in comparison with Paris, France, and other places that they want these investment properties in, it's the cheapest internationally. So it works all over the place for buyers that are foreign national buyers that are buying these properties. As far as U.S. buyers, it's a strong product. The way that we have it set up, it streamlines documentation, so the borrowers don't feel much of a pinch. But let's just take this down to the bare bones. You walk into a realtor's office with a flyer. Number one, you have a flyer that has something different on it, so you can get their attention. But our account executives at Angel Oak, we'll go into your realtor offices and we'll do presentations with you. We can be the subject matter experts. I've done a few of those now, and one of the first 3 questions the realtor asks is, can I use this product? They care about it because they want it for themselves. So you walk in, we're giving you something that they're going to be interested in, and the rest is up to you, but it works well.
Yeah. So some other things, I know, Chris, you touched on some credit scores. Can you go through those to clarify for some people that are still asking some questions? What LTVs and what credit scores are we requiring for certain LTVs?
Right. So we always say the secret sauce of what Angel Oak does is skin in the game, okay? And what you're going to see in the field out there now, even with Fannie and Freddie, is larger down payments, and even at a par rate, you're paying points to even get an approval, get a rate at all. So on this, our maximum LTV is 80%. You can get that all the way down to a 640 credit score. So pretty wide open credit score range. The entry level score for entry into the program is a 600. At a 600 credit score, you can get 70% LTV. Also, while we're talking about that, keep in mind that the rate improves dramatically for every 5% increment that you come down off that. So, for example, they go to 20% down to 25% down. Not only do you open the door to no DSCR requirement, but you also get about a half point better rate too. But 80% is what we see a lot out there.
Yeah, that's so true, Chris. I love that. You know, sometimes if your borrower wants 80%, but maybe if they could put down that extra 5%, you know, that rate does get better by about a half a point. So, hey, Al, talk about BK. Go ahead, Chris. Good.
One other thing that they might be asking about is cash out max LTV, 75%, 2 to 4 unit properties, 75% LTV also. So just keep that in mind.
Sorry, guys, I thought my phone was on silent. I apologize for that. Hey, Al, talk about the BK seasoning. We have a question in here about BK seasoning from Tracy.
Bankruptcy seasoning is going to be 48 months on these properties on a Chapter 7 bankruptcy.
Yeah, and another question here about lease agreements. I know you touched on it, Al. The great thing about this program, we're really just qualifying that borrower just on the subject property. No lease agreements, no tax returns. It is truly, you know, fast and easy. I mean, it's really, it's
well,
we
yeah.
are. Go ahead, Al.
If I could throw something onto that, you know, keep in mind that we can do it if it's dollar for dollar at an 80 LTV. But if that DSCR, if the rent is lower, you know, where does that show up on an appraisal? Well, it shows up in vacation areas. If you've got a vacation, you know, weekly rental, you know, vacation B&B or an Airbnb, the appraiser is required to use 12-month leases. That's what they have to use per the appraisal handbook. So the 12-month lease doesn't equal what you're going to get in a vacation area where they can get, you know, $4,500 a week to rent this property. So that's where you're going to see the situation. That's why we would drop that to a 75 LTV if you have a 700 FICO score, and then we're not concerned about that DSCR ratio anymore.
Hey, and Al, just, you know, are we pulling foreign credit? I know you answered this question, but I just want to make sure we clarify for everyone. If it's a foreign national, what kind of credit are we pulling on them?
There's no credit on it.
Right.
So yeah, I mean, we don't even want to think about trying to read those reports.
Right. Yeah. So hopefully that answers, Frank. I believe that was your question there. So talk about the reserves, Chris. Reserves just for the subject property, or are they for all the other properties?
6 months reserves on subject property only. And again, if it is a refi cash out, the cash out can satisfy the reserve requirement. So pretty easy. Another question I get a lot is, are gift funds allowed? No, they are not allowed on this. Now, a positive is we only season the funds for 30 days. So take that into account.
Yeah, and I get what you mean in there, Chris. Elizabeth, I know we answered the question. Yes, if it's a purchase, the property can be vacant. It's just for refinances and cash outs that the property cannot be vacant. So hopefully that answers your question there. Hold on, I'm still getting some questions. I think, Jackie, we just answered that question about a purchase being vacant. That's fine. Again, Al, if you don't mind going over the housing history, you know, what are we requiring from a housing history, and if there are any lates allowed during that?
We want 12 months housing history for a primary before they buy their first investment property. After that, the other investment properties owned, if they're not on the credit report or they're on the credit report, we're going to need to see a payment history where they've been paid as agreed for the last 12 months, as long as they've existed for 12 months.
Yeah. And then Lance, one of the questions you're asking about cash out on these deals, and I've seen, you know, one of our A's in Florida has gotten this done. Talk about an exception. We were able to close do cash out on 10 properties for one borrower, sorry, and we were able to do 10, and usually our guidelines say 5 properties or an exposure of $2 million. So we were able to do that 10 pack because we put that borrower in a better position financially and also gave them cash out to go purchase some more properties. So those are examples, real life examples that we see every day.
John, if I could add something to that, I've seen people take that and really run with it, because you can walk in, the borrowers come in, you've got a borrower that, you know, they're nervous, they're buying their first investment property, you got a streamlined documentation product, you can take care of them, they're happy. All the way up to a borrower who is sitting down, you can sit down with this borrower who owns how many investment properties, unlimited. You can go through and say, okay, we're going to cash out on these 3. We're going to purchase these 2. You have the tools to be able to talk to any borrower, you know, who's a target source, investors, investment property, you know, community. You get into B&I groups, things like that. You're armed and dangerous. You can talk to any of them.
Yeah. And then we talked about reserves. Chris, you talked about reserves being allowed to be used on a cash out. Those cash in hand can be used for those reserves. I believe you touched on this, Chris, but the question came up again. What about gift funds on our DSCR or foreign national program?
Gift funds are not allowed on that. Again, you know, keep in mind, we're not looking at employment, not looking at income. We do look at, are you 0 times 30 on your mortgage history? Do you have trade lines? And do you have your own funds to do that transaction? So, yeah, again, we would shy away from somebody who did not have the 20% down and buying an investment property without disclosing those other things to us. That's kind of a nippy loan. But again, we only season the funds 30 days.
Yeah, and I think, Rob, we answered that question. Chris answered that question earlier about cash out. Max LTV is, Chris, you mentioned it earlier, 75%.
And $500,000 cash in hand. Keep in mind that too.
Yeah, so John, hopefully that answered your question. Guys, we're about 15 minutes before the top of the hour. I do want to, we still have a lot of questions. I promise we will get your account executives out there. We also have some people helping answering these questions behind the scenes too. So hopefully, but we want to show you a couple of quick tools. Al, take us through a scenario. This tool, just, you know, your account executives are available all the time, but really get used to using this tool. And we've had a couple of people ask this question. Well, what is our, and Chris answered it a couple of times, what's our LTV requirement? What's the credit score requirement? Well, this is a great tool to use to get these answers for you quickly.
Thanks, John. You can get the answers, and then once you price your loan and get a general idea of whether it's doable or not, you can select a price and you can use this. There's no password, it's secure. You can send us your 1003, you can send us your credit report, and we can issue a pre-qual, and that pre-qual is in writing. John, you can go ahead and put in I don't have access, you can put in a loan amount that looks fairly standard. Credit score, your loan to value. These are just general parameters. This is, you know, what you're going to have handy with your borrower. Okay, so yes, the last option is going to be the DSCR, and then, believe it or not, occupancy, pick investment. A lot of people miss picking investment. It's kind of a funny little miss that happens a lot. So we're looking at a U.S. citizen first. Everything else is pretty cut and dry. This is it's going to give you a par price. So your par rate on this, we've got the 699 rate. Sounds a lot better than 7. It's going to give you a couple of, it'll tell you your bankruptcy seasoning. It's going to tell you the housing event seasoning. So that's if there's anything from a notice of default to a foreclosure. And that's only 48 months. The reserves it gives you, and then the lock duration. So if you hit view rates, this is going to give you rates, and it breaks it down. It's the rate, and then it's how many points, and then what those points equate to in terms of dollars on your transaction. So you get an idea of where you want to price it at. Obviously, you're pricing borrower paid or lender paid. If lender paid is going to be set at whatever you set your lender paid compensation at, borrower paid is the way that you can change your pricing. This pricing is just to get an idea. When you're using this, remember, you're not locking the loan. You're not committing to anything. You're just getting the pricing. And if you're going to send it for the pre-qual, John, if you hit select option.
Yep.
This is, and then scroll to the top.
Oh, sorry.
Yeah, it's the system that does that. So basically, it's going to give you the option. This is just a drag and drop or an upload. If you've got your 3.4 file, you can put it in there. If you don't, you just hit next. And then basically, you can do these in 5 minutes. You're picking who's your account executive, what's your company, basically general information, and then you're dragging and dropping. There's going to be an asterisk by what you actually need. Like you see, there's a 1008. You don't have to have a 1008. You have to have a 1003. You have to have a credit report. If this were a bank statement loan, the bank statement loan would have an asterisk next to it. So once you do this, you can go down to the bottom. There's some other questions, but you can send this. This is going to go to us, and then we're going to get you an answer back in writing inside of 2 days. If there's something else that we need, we'll contact you.
So Al, did you want to take them to a foreign national one?
Yeah, just because you can see that the foreign national can be priced. It is accurate. So we put in the same information. Okay, when you click on credit score, hit the scroll, go down to the bottom, foreign national credit score. So then your loan to value, we know, is going to be set. It's a max 70. And then once again, it's a DSCR. It's an investment property, and then it's a foreign national. That's your borrower type. So you do have the tools to price this, regardless of who you're talking to. So you're going to see, obviously, the rates higher, rates. This is a get it done kind of loan. And then you have the same information. You can also send in your pre-qual.
Yeah, and I think that's critical about this, Al, is you don't need login credentials to get here. And this is available 24/7 to you. So if you do want to run scenarios, I would encourage you all to bookmark this and then use away. And then as Al mentioned, call your AE up and ask them, am I missing something on this? And then as you see, you can view rates and then submit the 1003 and credit report. And we went over what we really need on a 1003 and what trade lines we want on the credit report. Hey, Chris, we're coming up to about 10 minutes at the top of the hour. I'm going to log in here. A lot of people have asked about how can I market? How can I find these borrowers? Chris and I are going to take you through that. And in here, you actually do need login credentials. So get with your AE and get those login credentials. And I think they're pounding them out right now with probably less than 24 hours. So you can get your login credentials in that time. So Chris, take us through the marketing portal.
First thing you want to do is get with your AE, and they'll send you a form. It's a user access form. Let's assume you've gotten that. Usually our team turns those around in like 2 or 3 hours. So you'll get your user ID, it's your email address, you create your password. If you forgot your password and you did this months ago and haven't touched it since, hit resend password or reset password and you'll get a new one. And it is as simple as logging in to what you see on the screen now, clicking on Marketing Portal, then Flyers. People go, can you give me some directions on how to do this? I'm like, yep, log in, Marketing Portal, Flyers, and you're there. So you'll see you have all of our flyers available right here to customize with your name, your logo. You can put your picture in there if you'd like, your NMLS number, email, phone number. And I think the really cool thing about this is I think so many loan officers are struggling with, I had people ask me this week, how do I reinvent myself? Now that the rate and term refi business is starting to slow down and dry up, how do I reinvent myself and do non-QM? Well, right here's the answer. And I said before, you kind of have to be like a missionary. You got to go out and spread the good word. Here is what your tool to do that.
I guess we've got a little bug on our flyer system. We'll get that figured out for you guys, but this is where you can see we have access to not only just all investment property flyers, we have access, we've got, and we also have them out here in Spanish. So sorry, I don't know why that's not working right now, but as Chris mentioned, there's a really easy, you fill out the information just once and it populates for all the flyers. Chris, take us to the social media posts.
So our social media posts, and one of the most effective social media posts I've seen was for this program that we're covering today, the DSCR Investor Cash Flow. You can access all of our social media, as you see there on the screen, to post on your social media. I would highly add to, for example, the Investor Cash Flow, that we can also do that interest only. I've seen a couple of people do that, and within an hour or two, they'll have 40 comments from realtors where they're like, holy moly, I didn't know that you guys could do that. And so it really drums up interest, makes your phone ring, and gets you more deals, which is certainly what we're here to do. But you can tap on that, download it, screenshot it, put it on your Facebook or Instagram. And, I would recommend doing that consistently. I see a lot of people will try this. They get hot on the topic for a week and they'll do it for a week and then they don't come back to it. I think key to success for this, the social media marketing and your flyer marketing, is consistency and repetition. So I would recommend doing it every Tuesday morning at 10 o'clock or whatever time works for you, and do that for about 3 or 4 weeks until people realize that you're very serious about this and you can do this. Because if you just do it once, they'll forget about it. You have to be consistent and repetitive, but please do that 3 or 4 times. And I think you'll see a lot of good results. I always go back to the movie Field of Dreams. You ever seen the movie Field of Dreams? If you build it, they will come. Well, on this, if you market it, they will come to you. I promise you. So please, use these tools that we've built for you. They're absolutely awesome, and they can, you can leave these things behind too.
Yeah. So yeah, Chris. While we were talking, the flyers has been fixed. So I just wanted to go back there and just show. This is just one example of the flyers that we have, and you can see someone has filled this out already, and it will pre-populate all the other flyers. You can put your image up there. You can put your disclaimers at the bottom. And then, Chris, just take us through, I know you do a lot of these presentations, Chris. Take us through the realtor presentation and just give us, just talk a little bit of successes that you've had with this presentation on behalf of your LOs.
I absolutely love doing realtor presentations. And the way we do it is a loan originator will call me and say, hey, I'm not quite comfortable with this stuff yet. I don't want to get up on a stage or whatever and talk about something. And they hit me with a question and I'm like, oh, I don't know that. So what Angel Oak AEs will do for you is call your local guy and have them come in. I'll do a group of, I did 100 not too long ago, but a group of 40 is really fun because you can ask them questions. Have you ever done one of these before? And they were like, no. And what I find is for every 10 realtors you have in the room, at the end of the seminar or presentation, you'll get one loan application from those realtors or one of their close related friends or whatever, one loan app for every 10 realtors in that room. So, it's an immediate payback, plus you then, like I said, recruit a sales force that goes out on the street for you and start selling this product for you. So it's not just you out there in the world trying to, close some loans. You've got a sales force of 40 people. Do that week after week, month after month, and now you got 400 realtors who are going, hey, that guy, that girl over there, she's different. She can do things that my guy over here just, he's in a box. He's in that DULP box, and he's telling me on these investment properties, I got to pay 3 or 4 or 5 points to even get the loan at all. Whereas I can call my LO over here who's outside the box and did that presentation for me. They're my go-to now. And, you want to get on your President's Club trip. You want to make a bigger paycheck. You want to serve more people. You cannot do it without these products, because without these products, you're just like everybody else and you're trapped in that box. So please, to help yourself and all your realtors that do business with you, learn these products inside and out. And if you don't feel comfortable with them, hey, take your AE with you. They'll hold your hand through the whole process.
Yeah, Chris, it's really powerful. You know, I've done them, Al's done them, you've done them. We have all of our AEs do them. They show up on your behalf. They don't say anything about Angelo. They just talk about how they're just one of your investors, and they'll drive that conversation back to you. If if your name is Steven and you're the LO, they're going to be like, hey, we have this program for self-employed borrowers by qualifying them using bank statements. So when you have a self-employed borrower, what are you going to do? You're going to call Steven because Steven knows how to get these deals done. It's the same thing with these DSCR programs. You know, I think I read a statistic the other day where I think 17% of the purchase market right now is made up of investors. So, and we know the Mortgage Bankers Association said 62% refis were dropping by 62%. So there's a great opportunity to do cash outs on this program, and there's a great opportunity to do purchase on this program. And guess what? When you're doing cash out, it's not being taxed. So I know we're at the top of the hour, near the top of the hour. Al, anything to add or anything to close with?
Well, John, you just mentioned that business is down. I saw a customer last week. I went in and he had just run his numbers, asked him how he was doing, and he showed me that his year over year was down nearly 70%. But he actually went through and he subtracted out the refinances, and he said, when I took out the refis, just the purchases, I'm about where I was last year. So that led us into, okay, there's purchases. How do you grow purchases? You grow purchases with product. If you're looking for product to give people options, we're not a bad place to look.
Right. Yeah. Very well said, Al. Great information to share too. Chris, anything to close with?
John, can you tap on that bottom flyer real quickly?
Sure.
This is an invitation that you guys, all the loan officers can use. There's one more below that. It's got a bunch of circles on it.
Hold on.
But they can use that one too. That one, right? Well,
that is the new one.
A little bit. Okay, gotcha. You guys, please use that and grow your business with that. Again, you got to go out there and market this stuff. It'll help you immensely. To me, it's a lot of fun because you're doing something different as opposed to somewhat of a commoditized business. Now you can be creative and open up the doors, and realtors will view you as a solution source. And they always use that term, trusted advisor. You will walk out the door a trusted advisor after showing them how to do these programs.
Yeah,
but thank
Chris.
you.
Sorry, Chris, go ahead.
That's it.
Oh, yeah, Chris, great information. We're in a market where you really do have to diversify and differentiate yourself. So, and in the end, I know there's a couple people on here that have closed loans. Look at the opportunity to have closed loans with Angelo. For those people, we really do appreciate your business. But almost 65% of you have not closed a DSCR program a file in the last 12 months. There's a huge opportunity, and we've got over 90 account executives across the country that are willing to help you hold your hand through that entire process and make you look like a superstar to your referral base. So, and at the end of the day, it's about getting people in homes. It's about having individuals accumulate wealth, and there's no other place to do it faster than in real estate. So on behalf of Angel Oak Mortgage Solutions, everyone at Angel Oak Mortgage Solutions, thank you for taking the time out of your day today. This was recorded. It is still being recorded. We will get the questions that we did not get answered by no later than tomorrow morning, and we will have a recording on this out before end of day tomorrow. Join us next week. Next week, same time, we're going to do our full doc and our ITIN program, and then also talk about the great tools like Quick Quote and our marketing flyers. So look forward to seeing you next week. Thank you for participating today. Have a wonderful afternoon.